Does it look like to you, does it look like that Bitcoin is currently repeating late 2021 cycle?
I think no. I think we're actually in 2019. I think it's more similar to 2019, and there's a couple of reasons for that. One reason,
What's been driving the Bitcoin price and ultimately the rest of the crypto markets? We're talking about this theme with our next guest, Ben Cowen. He is the founder of Into the Cryptoverse. We'll be talking about his work as well as his outlook. Welcome back to the show. Ben, good to see you as always.
thanks for having me, David. Pleasure to be here again.
Pleasure to have you. Importantly, the CPI print came out this week and Bitcoin dropped to 58K on the news. So broadly speaking, before we talk about your outlook for Bitcoin, the economic drivers, if there are any, behind the Bitcoin price, have you identified any?
I mean, look, I think inflation plays a huge role. Obviously, I think the markets are trying to sniff out if the Fed's actually going to engineer a soft landing, and get inflation durably back to 2%. There's obviously the two extremes. They run the risk of a second wave of inflation if they repeat the 1970s. They run the risk of a deflationary crash if they repeat the 1940s. So it's a fine line for the Fed to walk. I think some of the main things outside of the macro side that are driving the markets are things we've talked about on here before. Bitcoin dominance, and that's essentially looking at like altcoins on their Bitcoin pairs and assuming they're oscillators at best. I think that plays a huge role. And then I also think the Fed's reaction function to inflation and everything. When do they actually cut rates and by how much? I think a lot of that does ultimately play a role in where Bitcoin price action will ultimately go going into the end of the year. Because I mean, it's so far the ETFs haven't really been able to lift Bitcoin, much higher for the last half year or so.
Okay. I remember speaking to you in prior months and last year as well. Let me just show my screen and I'll let you share yours as well. This is Bitcoin versus the Nasdaq. The narrative used to be simple. The Bitcoin price closely correlated with tech stocks. That diverged significantly this year. As you can see from the screen here, the purple line on my screen is the Nasdaq. Interestingly, though, Ben, if you overlay Bitcoin to the Russell, again, not perfect, but closer correlation than with the Nasdaq. So I'm just making my interpretation. I'll let you answer this on your own, but it seems to me, Ben, that the Bitcoin price is still roughly in line with some risk assets. It's just that the large tech stocks, the Mag 7, have just been having their life a life of its own. And so that's diverged from the rest of the market, but Bitcoin still tracks stocks. Anyway, that's my take. Feel free to disagree. What's your take?
Yeah, no, I mean, I think crypto in general is further up the risk curve than a lot of other risk assets, which is why they tend to do very, very, very well when market conditions allow for it, and they also tend to sell off sooner than other asset classes, referring to cryptocurrencies. It is true. I mean, if you look at, let me go ahead and share my screen here. Um, uh, Let me figure out how to do that. So there we go. Share screen. So one of the things that I've looked a lot at are you can look at correlation coefficients, right? And this is a Pearson correlation coefficient matrix between TMC's total market cap. You got Bitcoin, ETH, the S&P, Tesla, Apple, Amazon, Alphabet, DXY, and then various precious metals as you go further and further out. And so you can see that Bitcoin over the last 60 days has been very highly correlated to other cryptocurrencies, but it hasn't really been correlated to equities, except for maybe the Russell 2000, as you mentioned. And it's been inversely correlated to precious metals. Now, I think a lot of people think that this is something that Bitcoin hasn't seen before, but in reality, this is almost identical to what happened to Bitcoin in 2019. I mean, this is the Bitcoin chart overlaid with the Nasdaq. If you look at what essentially happened in 2019, the Fed cut rates in July. So let me just overlay US interest rates onto the chart so we can all see that. So this green line is interest rates. You can see that as the Fed cut rates, Bitcoin diverged from the Nasdaq. And of course, it did pick up the following year, but not until the last rate cut, and not until QE began. And that began, I believe, starting in Q3 of 2019. And that's when Bitcoin finally started to go back up. Of course, we did get the pandemic, which, it's hard to predict stuff like that. But
Yeah.
that's ultimately what happened. And so if you look at it now, you can kind of see the same thing happening, right? I mean, Bitcoin has diverged here from the Nasdaq, and it still gives me sort of like flashbacks of what ultimately happened in 2019, where Bitcoin shows weakness well before the equity market does.
By the way, if you take a look at the Bitcoin chart, going back to 2021, the last time we had a bull cycle, 2021, and late 2021 peak. So it crashed in 2022, as you know, but the double top made in 2021. Can we just revisit that? What caused the first initial drop? Because keep in mind, the stock markets continued to grind up higher throughout 2021. It wasn't until 2022 or late 2021 that we saw a coincident decline in the stock market. So, what caused the first drop in Bitcoin?
One of the interesting things about Bitcoin is, we can always come up with a narrative for what's causing it, right?
Yeah.
Um, I generally think what happened in 2021 is this. So if you look at the last three peaks, right? Q4 2013, Q4 2017, and then Q4 of 2021. What's interesting is after a major top, Bitcoin then goes back to its 50-week moving average and then gets a dead cat bounce. That's what we saw in 2013. And then here you saw it in 2017 as well, back to the 50-week dead cat bounce. It almost seems like the real top in 2021 that had a lot more credibility was the April top. And then this was just a dead cat bounce that ultimately gave us new highs, which was different than what we had seen in the last two cycles. One of the things I like to track with Bitcoin is something that's called the risk metric. And the reason I look at that is because again, there's always a narrative for why price has to go down or for it to go up. But actually in 2021, in early 2021, that's ultimately when the risk level for Bitcoin went to the the 0.9 to 1 risk band. And so normally after that, that's when Bitcoin sells off. Of course, there's going to be a reason for it. There's going to be a narrative. We could blame inflation. We could blame all sorts of things. But ultimately, I just think that the market got extremely overheated very, very quickly, probably caused a lot by, you know, um, MicroStrategy was very vocal back then. Michael Saylor very vocal back then about being pro Bitcoin, adding it to their balance sheet. I think
Mhm.
that just led to a lot perhaps more quicker speculation and more rampant speculation sooner in the cycle than we normally got. And I do think that when you go to those high risk levels, it warrants having a longer bear market, whatever the reason may be.
Does it look like that Bitcoin is currently repeating late 2021 cycle?
I think no. I think we're actually in 2019. I think it's more similar to 2019, and there's a couple of reasons for that. Um, One reason, if you go look, one of the metrics that I follow is the social interest in the crypto space. So this is called the social risk, and
Hmm.
it's essentially made up of like people that watch crypto YouTube channels, people that watch or
Interesting.
they're subscribers. Actually, if I just pull it up so you can actually see the chart before I show you the risk level for it. Here is YouTube views to, I don't know, some 20 or 30, maybe more crypto YouTube channels. So it just takes a moment to load because it is quite a bit of data. But when it does load, essentially what you'll see is that back in 2021, when we had this mania phase, you can see that a ton of people were piling in to watch YouTube and watch crypto YouTube, right?
Yes.
And actually these channels over here were averaging at the time about 4 million views per day. Now those same channels are only averaging around 850,000 views per day. So we're not at the extreme level of sort of social speculation that we saw back in 2021. But what it does look similar to, if you go back and you look at the social risk, which does take into account this chart as well as four other charts, you can see that social risk came down to a low and then it bounced and then it's just kind of down here. It looks very, very similar to me like 2019, right? So I don't really think that what we just experienced was a 2021 style mania phase just because we retail never really returned, which has been one of the interesting things. It's been one of the really confusing things about the market, I think, for a lot of people is because Bitcoin went to all-time highs,
Hmm.
but we never really saw the return of retail. And again, one more piece of evidence to suggest that 2019 is not the worst comparison is it's actually a very similar move in terms of percent. If you were to take a price range from the low in 2018 till that 2019 top, about a 350% rally, same thing we just saw. From the rally in 2022 until early 2024. So it still gives me those, the sort of the thoughts of, hey, what if this is just kind of like 2019 where Bitcoin goes up, but one of the main reasons it's going up is because I mean you have the ETFs, of course. I'm not trying to
Yeah.
minimize that, but one of the main reasons it's going up is because Bitcoin dominance is going up. So people are converting their alts into Bitcoin, and that's taking Bitcoin higher. And it's one of the reasons why Bitcoin put in new all-time highs, and most altcoins have not.
Yeah, it's a good you brought up Bitcoin dominance. So it's currently trading around the 2019 level. And if you look at the charts, the Bitcoin dominance continued to grind up into 2020. It was interesting though because pre 2017, the Bitcoin dominance was nearly 100%, and I guess the introduction of alts around 2017 brought that down to about 30%. Was there another reason? Ben, I mean, Bitcoin used to be the entire big crypto market. Is that one day going to happen again?
No, I don't think so. I think there's room for Ethereum and many other cryptocurrencies. I just think that Bitcoin dominance is potentially, like an oscillator to some degree. But I don't really think it's going back up to 70%. My target on Bitcoin dominance has just been 60%. And the reason for that is because I basically think that when you get these major alt seasons that occurred in 2021, a lot of times when you get these breakdowns, the metric will then slowly go back up to the point of the breakdown. And in fact, I think that Bitcoin dominance will make that final move as early as September or as late as December. Um, I think that one of the things that makes Bitcoin dominance trickier now compared to back over here in 2019 is that in 2019, the stablecoin market cap was not very high, right? If you were to look at USDT dominance, USDT dominance back then was actually quite low. And this is actually something I've tracked for a while as well. If you look at USDT dominance, you can think about it sort of like a flight to safety in the same way you might think of it as Bitcoin. Every time USDT dominance has tagged this trend line, there's been a larger correction with Bitcoin, and we tagged it again over here in March 2024. So because USDT dominance is now at 6% and not, 0% like it was back in 2017, 2018, that's one of the reasons why Bitcoin dominance is likely not going to go all the way up to 73%. But with that said, I think the appropriate thing to do is to just add Bitcoin dominance to USDT dominance to sort of get your flight to safety dominance metric. And one of the crazy things about it is that it's at the exact same level today, 63%, that it was right before the Fed cut rates in 2019. So in 2019, June of 2019, Bitcoin plus USDT dominance was at 63%. The Fed cut rates in July, and then by September, Bitcoin dominance plus USDT dominance was about 10% higher than where it was just before the Fed cut rate. So I kind of think that's what's happening right now. There's just been, some consolidation. The market is digesting the move that occurred in 2023 and early 2024. A lot of altcoins are still struggling. And I
Mhm.
think what's ultimately going to turn this thing around is when you look at Bitcoin dominance just by itself, there's two things that happened last cycle before it finally turned around. Okay. One of them is the Fed started to cut rates, right? So if you were to overlay interest rates onto the chart, you'll see that, look, the Fed started to cut rates, and then shortly after, Bitcoin dominance topped. But the thing that might be even more compelling is if you overlay the balance sheet of the Fed. When they went from QT, they were reducing the size of their balance sheet here in 2019. But you can see the minute they started to expand their balance sheet, that's when Bitcoin dominance topped in 2019. And so that's what I think we need to see. I think after the Fed cuts rates and after they pivot from quantitative tightening to quantitative easing, you will likely see Bitcoin dominance top. And I think it's probably going to happen before the end of the year.
Another narrative that may or may not make sense, and I'll let you address that, is that this time it's not the retailers getting in; it's the large institutional investors, more so than actually in 2021. Here's an article from CNBC. This is Goldman Sachs jumps into Bitcoin ETFs and one hedge fund gets bullish. So this is what they wrote. I'll just share my screen here. For most of the banks, the vast majority, if not all, of the ETF flows can be attributed to wealth management clients asking for exposure rather than a decision by the firm to hold the assets on its balance sheet. In particular, Wall Street investment banks are coming in slowly. Hedge funds are taking a more aggressive approach. Millennium Management, which oversees $62 billion, now holds over $1.1 billion worth of shares in at least five Bitcoin ETFs. So large family offices, wealth management firms, they're actually requesting BTC ETFs to be held, and so that's driving a lot of the flows. Um, is that something we've seen before, Ben?
I mean, I think it's the same thing, slightly different narrative. Basically, when I think what you said makes a ton of sense, and I think that that is actually what's happening, right? But I would also argue that happened 4 years ago too. It was just that instead of ETF flows, it was just people were focused more on Bitcoin, and we have to think about why. When the Fed raises rates and they're going through quantitative tightening, people are going to flee to the lower risk assets within each asset class. It's the same reason why you had the Magnificent Seven, right? It's the same reason why money poured into those is because as you get into tighter monetary policy, you want to go into the safer assets that you actually think have a good chance of surviving that tighter monetary policy. And so I think that's what drives it, right? I think that's what drives it. And essentially, you basically have 3 years of the cycle where Bitcoin takes more market share. And we've seen that. We saw it in 2022, 2023, and now 2024. It is a good narrative, but I do think, like anything, all those narratives will eventually come to an end. And this is someone who's been preaching the Bitcoin dominance thing for 3 years. I do think dominance will go down in 2025. It's the same time it always goes down. It went down in 2021 and it went down in 2017. And I think it's going to be on the back of loose monetary policy. I think that the ETF flows and whatnot are going to be used as justification as to why dominance won't go down. But I do think that as loose monetary policy arrives, people will start to feel that risk appetite go up. I still think we're a few months away from that, right? We still haven't even had our first rate cut yet. But if we fast forward, out to January 2025, we probably had a few rate cuts. Maybe the Fed stopped QT, and perhaps people feel more risky in the altcoin market once again.
So if you're assuming that Bitcoin dominance will fall later next year, one of two things could happen. Either the alts will catch up or Bitcoin will fall. What's more likely?
Honestly, I think combinations of both. So sort of my view has been that so let me share my screen again so you can kind of talk about that'll be make it a little bit easier. Yeah. So essentially what happened, at least last cycle, and again, I mean, look, this time could be different. I'm not going to say that it can't be, but last cycle, what essentially happened is if you look at say like a fib retracement from when Bitcoin dominance fell, what you'll notice is that it topped out at the 618 fib. But what's more important is once it crossed the zero point 0.5 fib, that's where Bitcoin USD found a mid-cycle top, if you will. Once it crossed the zero point 0.5 fib. Now, if you look at the same thing this cycle from when Bitcoin dominance broke down, you can see that essentially when it crossed the zero point 0.5 fib earlier this year, that's more or less what marked what you might call a mid-cycle top for Bitcoin. The problem is that after it did that in 2019, Bitcoin then bled for about 6 months while Bitcoin dominance went up. So you're essentially, this whole Bitcoin dominance move has been on the back of Bitcoin going up and now on the back of Bitcoin going down. Okay. Now, if you look closely at what happened in the last cycle, basically what happened is you could argue that the Fed achieved a soft landing. In 2019, Bitcoin fell back. It dropped from the high. It dropped about 50% or so over the course of 6 months. That's excluding the pandemic. But again, without the pandemic, you could have argued it was a soft landing. So I think that is kind of what we're coming up against here in the next few months. We're basically going to find out if it's a soft landing like 2019, or if we get a hard landing like 2020. I think, my base case right now, and it has been for a while, basically ever since March, that at the very least, Bitcoin will cool off for 6 to 9 months. And this is what I said back in March. And one of the reasons was because the market got so far ahead of itself. One way to visualize that actually is to just look at the ROI of Bitcoin from the lows in 2022. And one of the things you'll notice is that it's actually right where the last two cycles were, essentially at this point in the cycle. So, back over here in March, when the ROI of Bitcoin from the low was over 4.3, the last two cycles at that point in the cycle, it was still around 2 to 2.5. So it made sense for the market to cool off for a while. So I think you're at least going to see the market continue to cool off for at least a few more, at least a couple more months. And it could go through the end of the year. It's possible for it to go through the end of the year. But I think that if the Fed does engineer a soft landing or at least some remnant of it, then Bitcoin could maybe pick back up in 2025.
I've heard on my show that $50,000 is the floor, and certainly it's had a hard time breaking below that support level. It very briefly touched $49,000 at one point last week. Does that make sense to you? 50,000 is a new floor?
The one thing I've learned with Bitcoin through the years is you never should ever call a floor or a top because usually those things,
Okay,
given enough time, are broken. Um,
fair enough.
so I would say that I wouldn't go that far to say that it can't go below 50K. Um, One of the things that I think about as well with regards to Bitcoin and that sort of that 50K level. I mean even look at 2019, right? After it had this explosive rally, it eventually dropped back down to the 100 week SMA, right? That's where it ultimately went before finally bouncing off of it. And I mean, the 100 week SMA right now is approaching it's almost at 38K. So, you give it a few more months and it's essentially going to be at Bitcoin's yearly open, which is in the low 40s. So, look, it's possible for Bitcoin to see something like that. And I know those are not popular views, and it very well could be wrong. And I'm certainly not suggesting that it has to go there. But
Yeah.
one of the things that I've also noticed though, with Bitcoin, and I've talked about this a lot, is if you go back to that risk chart that I was talking about earlier, the
Mhm.
current risk on Bitcoin is 0.498. But what I'd like to do is I'd like to isolate any time, it went to at least zero point 0.7 to zero point 0.8. And you can see that that's where we went back in March, zero point 0.7 to zero point 0.8. Every single time in Bitcoin's history that it's gone to the zero point 0.7 to zero point 0.8 wristband, it's gone to the zero point 0.3 to zero point 0.4 wristband, within 6 to 9 months or so, right? So here in 2011,
Mhm.
here in 2013, here in 2017, here in 2021, and it hasn't done that yet, right? It hasn't done that yet in this cycle. It's gotten close, right? It went to the zero point 0.4 to zero point 0.5 risk level, but it hasn't gone to that zero point 0.3 to zero point 0.4. So I still think there is a risk of seeing something like that. And I think if what is the catalyst for something like that? It could be something as simple as like yield curve on inversion for whatever reason. Maybe it's the unemployment rate going higher. Maybe it's the market being fearful that the Fed's going to have a second wave of inflation or a deflationary crash. I don't know what it's going to be, but that could theoretically happen before the end of the year. And I don't if it does happen, it's just 2019 repeated.
Very good. Ben, let's talk about this tool on your platform that I personally really like. It's the modern portfolio theory tool, which basically it gives the user an optimal portfolio allocation. Can you just walk us through how this works and what it's currently showing?
Yeah, I mean, I think the point is like, to understand this tool, the point is like, the reality is that no one knows where the price of Bitcoin's going to go, right? You don't know, I don't know. I mean, I definitely don't know, right? I definitely don't know where the market's going
Okay,
to go. It's all just, guesswork, right? Based on data and what we think where things might actually go.
sure.
So one of the ways to compensate for that, is sort of recognize, hey, I don't know where the market's going to go. How do I maximize my risk adjusted returns? So there's two things you can look at. There's the Sharpe ratio and the Sortino ratio. And essentially what it's doing is just looking at historical returns and saying, all right, well, if the market continues to do
And,
what the
and
market
sorry,
is doing.
sorry to interject, just for the audience, the Sharpe ratio is a risk adjusted return. So it's a significant because the higher the risk adjusted return, um, you know, the lower the risk per unit of return. So that's what we're looking at here. Anyway, please.
Right.
Yeah,
Yeah, so the higher the Sharpe ratio, the better. Bitcoin historically has had a pretty high Sharpe ratio, especially compared to equities. But the point about it is to say, look, I don't know where the market's going to go. How do I get exposure to the asset class? Like, what is the proper way to do so to give me exposure to the upside, but also minimize my downside risk? Right? As investors, we know there's a risk you take if you buy Bitcoin or if you buy Ethereum or whatever, or if you buy alts, right? There's a risk associated with it. So the Sharpe ratio basically is saying, all right, we're going to plot out the expected return versus volatility. And that way we can actually figure out what the Sharpe ratio is. So this is a Monte Carlo simulation. This is 50,000 portfolio simulations showing you what your Sharpe ratio would have been had you had various amounts of Bitcoin, ETH, and USD. right? That's what it would be going forward based on historical returns and based on historical volatility. So essentially, the ideal scenario is to pick a portfolio over here, which is known as the efficient frontier, right? So you want to be on this side of the curve, not the underside. The underside is basically saying you're taking on more risk and you're getting less return. That's what people want to generally avoid. So in this situation, we also want to look at the Sortino ratio. The reason I pull up the Sortino ratio over the Sharpe ratio, I think the Sortino ratio is actually better, is because the Sortino ratio does not punish positive volatility, whereas the Sharpe ratio does. But as crypto investors, we want the price to go out, right? We don't want to punish that. So I think it makes a lot more sense to look at the Sortino ratio. And in this case, going back, for the last several years, the portfolio that maximizes your Sortino ratio right now is 66% Bitcoin, 17% ETH, and 17% US dollars. Now, where this gets interesting is if you just throw in a random altcoin, right? And you recalculate this. And
Mm.
this is why going back to Bitcoin dominance, right? This is why that stuff is important, is because the portfolio that maximizes your Sortino ratio with Bitcoin, ETH, and Litecoin is
Zero.
0%. It's zero. But again, there's a reason for it, right? It's not that Litecoin doesn't go up, right? And again, like, I'm not just picking on Litecoin. This is true for a lot of different cryptocurrencies.
Can
But
you
the
throw in
reality,
Solana? Just I'm curious how Solana compares to ETH.
I don't know if we have Solana
Okay.
on
All
there.
right. Well, we can pick
You
another
you
one.
have to you have to have a couple cycles worth of data for it to
Okay.
even make sense, right? And Solana hasn't really been around that long, so I only
Okay.
have older cryptocurrencies on there. But the reason why I talk about that, like look at Litecoin, the Litecoin Bitcoin valuation, right? Like it just keeps going down. So when I talk about
Mm.
Bitcoin dominance and the modern portfolio theory stuff, it's not that the altcoins can't go up. It's just that for every dollar you put in Litecoin, that's a dollar not going into Bitcoin, or that's a dollar not going into Ethereum. And so that I think is the thing to realize. That's why it's important. So yeah, I don't have that one. We just have XRP, Monero, Doge, XLM, and US dollars. So that's all we have on here right now. And the reason is because you need two cycles worth of data. And the reason for that is because you can only go back as far as the youngest asset. So, for instance, if we were to throw in Solana, the portfolio would basically just say 100% Solana, more than likely, because Solana hasn't been around long enough and it'll only show Bitcoin's price history up until when Solana was created. So it'll essentially ignore all of the gains that Bitcoin had previously. And only look at it over the last however long Solana's been around. That's why you typically need a couple of cycles. That way, all the altcoin in question has gone through a couple of bear markets, and so we actually know how it behaves.
Okay. So basically, to use this tool, you want to be picking an allocation that maximizes either the Sortino ratio, which is the first line, or the Sharpe ratio, which is the second line. So in this
Yeah,
particular case, you're looking at 76% BTC for maximizing Sharpe. And if you plug in USD, I think it's a little bit lower. What is the just math aside? What is the logic in holding like what was it, like 17% USD cash in a Bitcoin ETH portfolio?
yeah. I mean, the logic is that when stuff happens like what happened 2 weeks ago, right? I mean,
Right.
you know, if you've had no cash at all since March, you're
Mm,
buying the dips and you're basically just praying and hoping that the market puts in a new all-time high because you don't actually have cash to buy the dips.
I see.
Um, and so by having something there, by having at least something, it allows you to not be that concerned with where the market goes. And I think that's the way to navigate the market. Rather than predict exactly where it's going to go every single month, just say, you know what? I don't know, but this is how I'm going to have my portfolio. And if the market goes up, that's why I have exposure to Bitcoin. Because if the market goes up, it's because Bitcoin led it, right? And the altcoin market follows, at least until looser monetary policy arrives. If the market goes down, great. That's why you have some cash to take advantage of such a dip. So that's the reason. Again, the great thing about this is it's not based on what I think. It's just based on the volatility, the historical volatility of the assets, right?
Yes.
And so that's why I like it.
All right. Well, perfect. Where can we learn from you and follow your work?
Yeah, I mean, so I have a YouTube channel, just my name, Benjamin Cowen, and then I have my website, intothecryptoverse.com.
Excellent. Yeah, it's a very good platform and a very good channel. So I encourage people to check out Ben's YouTube channel, link below. And yeah, this is a very comprehensive platform. Again, I like the modern portfolio theory tool. So if you want to play around with that, I'll put the link down below as well. Check that out. Thank you very much, Ben. We'll speak soon.
So yeah.